Thank you for taking the time to watch this video, and within that time, and this video lasts about 15 minutes, I will show you how to invest into the stock market, into big successful businesses in a very simple, efficient and effective way that will produce you good returns on your money over the mid to long term. Okay, why am I doing this video? I love investing. It's genuinely my passion. I've been doing it for over 20 years. I've learned a lot. I've made a lot of mistakes. Okay, and I've achieved a very good return on my money. And I just want to share that information with you because I think there's a lot of people just sitting there with money sitting in a bank doing nothing. It's being wasted there. Right now, inflation is running around 10%. So unless you're achieving more than that on your money, the purchasing power of that money is going down. Okay. I also want to show my wife this video because she may watch this and convince her to put some money that she's got sitting in a bank for my sons to put into the stock market to achieve better returns. Okay. And by the way, I want to point out I'm not being paid to this video. Okay. I'm not affiliated with anything I mention in this video. I'm just doing it to share information. And by all means, if you want to subscribe to my channel, please do. Okay, let's get into it. The content of this video does not constitute investment advice. Do your own research. If you do invest in anything mentioned in this video without doing your own research and the share price goes down, you only have yourself to blame. However, if the share price goes up and you want to give me some credit, I'm happy with that. But if you've never invested in the stock market, the next 6 months could present you one of the best opportunities in the last 10 years. In this video, I will show you which account you need to set up to earn tax-free profits, the simplest way to make a diversified investment into some of the biggest and best businesses in the world. Okay, but first, why invest in the stock market? On average, the S&P 500 has returned 8 to 12% annually over a very long period of time. You're probably saying, what's the S&P 500? The S&P 500 is a stock market index tracking the stock performance of 500 largest companies listed on the stock exchanges in the United States. Okay, it's one of the most commonly followed equity indices. These are some of the companies listed on there. Household names like Microsoft, Facebook, Google, Amazon, Apple is the biggest in the Coca-Cola, PayPal, Walt Disney. You know, you can see a very recognizable MasterCard. There's loads there, BlackRock. If you added all the valuations of the S&P 500 companies together, it would come to $30 trillion. That's a very big amount. And just as a comparison, you may have heard of the UK's FTSE 100, which is the 100 biggest companies in the UK. Their combined valuation, £2 trillion. So conversion of dollars to pounds are still 10 to 12 times bigger, the S&P, than the FTSE UK. So it's a lot of companies there. These are companies that are churning out a lot of cash. They're very good businesses, some of the best in the world. So how much is 8 to 12% annually? Well, look at a bank at the moment. What are you getting if you put your money in a savings account in the bank? Less than what, 2%? 1%? £10,000 invested in the stock market 50 years ago would have grown to more than £380,000 today. Okay, now inflation is running at 10%. So unless your money is earning more than that, you know, that power of that money is going down. You can buy less. This is a fund I'll be looking at. Okay, it's on Vanguard, and this is the S&P 500 tracker. It just tracks the companies in the S&P 500. If you invested £10,000 in May 2012, it'd now be worth $32,000 right now. And of course, you can just convert that to pounds as well. But that's even after a big sell-off, which has happened. We are now in a bear market, but it provides an opportunity. Okay. Why is it better than property? You may be thinking, I'm going to invest in a house, buy to let, rent out, get some cash coming in. You can do that. But liquidity, you can buy and sell in minutes with a fund like this. Unlike property, if you've got landlords involved or sort of tenants involved, you have to get solicitors involved. It takes weeks, months to sell property. Okay. This here you can buy via an app or a website, this fund, okay, and it can happen in seconds, literally. No problem whatsoever. If you want to get your money out, you can straight away. And also you can invest straight away, very quickly. But the important thing is about time, of course. Stock market, of course, can be volatile. Why is now a good time to invest? The S&P 500 typically falls about 3 out of every 10 years. So meaning roughly 1 out of every 3 years it falls, which is an opportunity because 2 out of 3 years it rises. Okay, so where's the market now? So here we are. We're down around about sort of 19% in the past year, and it's been down as much as 23, 24%. So let's scroll back a bit. Look at 5 years, up pretty much 43.5% over the last 5 years. That's including the drop, by the way, that's happened in the last 12 months. Okay, so it was a lot better than that. So you can see quarterly performance. Let's go through the S&P 500 fund that I'm going to be looking at. Okay, this is going back to 2012, so 3 months is a quarter, of course, and it started. This fund started in the third quarter of 2012. In that quarter, it did 6.23%. It went down 0.5% in the fourth quarter, because October, November, December. All right. But in 2013, it bounced back strongly in January, February, March, and that year was fully positive, 4 quarters of positive gains. And 2014, and the first half of 2015. It dropped a little bit in quarter 3, then bounced back more strongly. And again, 2 more years of gains, okay? So you can see here, pretty much the blue boxes are all gains, and the red boxes are negatives. Right now, 2022, 3 consecutive quarters of losses. It hasn't done this in the last 10 years. And that's why I'm saying this is an opportunity right here, okay? There's no knowing when it'll change, but I'll talk about that later. But it will change. Stock market's been around for hundreds of years, and it's always pretty much gone up over time. So this is a long-term investment. It's not a jumping in and out. It's a long-term investment, okay? So how do I invest in the S&P 500? First of all, set up a stocks and shares ISA. Remember that, stocks and shares ISA, okay? This is not a cash ISA, different thing. Nor is it a normal stocks and shares account. I'll explain why. Everyone in the UK aged 18 or over has an annual ISA allowance. It's £20,000 for this financial year. It pretty much can go up. It varies now and again. It doesn't go down pretty much. It depends which government it's in. But £20,000 you can put into the account every year, okay? You don't pay any capital gains tax on profits made within the stocks and shares ISA. None at all. So if you put £20,000 each year and you make a ton load of profit on that, millions of pounds worth, it's all tax-free, okay? But you can only put £20,000 into this account each year. In a normal stocks and shares account, you are liable for capital gains tax if you exceed £12,000 profit on stocks sold. So that's profit. If your profit goes above £12,000 in a normal stocks and shares account, you have to pay capital gains tax, or you're liable for that. In the stocks and shares ISA, you're not. So where do I set an account up? There's many platforms. For example, mine is done through my bank account, Barclays, that's just through convenience. And these are other platforms, okay? And there's platforms and providers, okay? So Invest Engine, Free Trade, this is from Money Supermarket, by the way. You can check this out yourself. iWeb, AJ Bell, Hargreaves Lansdown. There's lots of different platforms, okay? And they all offer different funds by different providers. It's like, as Martin News said, it's like having, say, a supermarket is a platform offering lots of different products, okay? Lots of different types of bread. But if you go to the baker straight away, you may get it cheaper, And that's Vanguard. So I'll focus on Vanguard. Vanguard actually have their own funds, and they only sell their own funds. But they're very good performing. The story is very inspiring, and they're very low cost. So it's a good place to start, okay? And in fact, you can even transfer your ISA over to a platform if you want later. But I'm just going to start with Vanguard because it's simple, all right? You can pay a lump sum into these accounts or a monthly amount via direct debit, by the way, okay? But of course, if it's an ISA, you can't go past £20,000 in a year, all right? And that's it. So, just a reminder of that. £20,000 in cash every year in stocks and shares ISA. Any profits you make is tax-free. However, just because, this is very important, people ask me this quite a bit, just because you add cash to your stocks and shares ISA account, it doesn't mean it's automatically invested. It sits there like a bank account. You've got to pick a fund or an investment, all right? The cash will sit in that account to choose what to invest, whether it's individual shares of company stocks or a fund. If you're new to investing, I would suggest you stick with a fund, because like I said, very diversified, invest in lots of different companies in one go. Your money is spread, I'm jumping ahead of myself here, across a variety of investments, providing diversification, less risk, okay? There's many different types of funds. You can invest in technology funds, small cap companies in Asia. It's limitless, loads of different funds. But I want to look at the S&P 500. which I'm going to invest my sons in. So I'm hoping to set up a junior stocks and shares ISA account and invest in that. Okay, so this is Vanguard website, vanguardinvestor.co.uk. It's one of the biggest funds in the world. BlackRock and Vanguard are the biggest. Vanguard is, I think, less costly as far as fees are concerned, and it's worth checking out the Vanguard. Jack Bogle was the founder of this. It's a very inspiring story. Haven't got time for that right now, but it's very trustworthy. It's very big. So let's go there. Let's click on the Vanguard Asset Management. You can see here, bring value to 30 million investors worldwide. It's very big. If you scroll on here, stocks and shares ISA account, click on that. Okay. Open an account, and you just put your details in, all that stuff, and you set one up. But you can look here what we have to offer, our full list of funds, okay? And right here, it's got everything. Are you building, for retirement? What are you doing it for? So these kind of funds here, life strategy, 20% equity fund. That means 20% into shares, 80% into bonds. Bonds are meant to be more safe, an investment vehicle. But in the last 12 months they haven't been. But generally, the closer you are to retirement, the more they say you should skew your portfolio towards bonds, less equities, because equities or shares are more volatile than bonds. And you can vary this combination down from 80%. In fact, you can go 100% equity fund, which is very good. I've held that before. But we are looking for the S&P 500. So if you go on the side here, you'll see, there we are, a filter there. And these are the American funds. There's 4 American funds you can invest into here. This is the S&P 500. This is the one you want, okay? ETF, Exchange Traded Fund. And it gives you an overview, 505 stocks. That's because some companies have dual shares, like Alphabet, which is the owner of Google, or the parent company of Google. They have 2 different kinds of shares. I think Berkshire Hathaway do too, which is the most famous investor in the world's company. That's Warren Buffett. They're in there. And so it goes there, ISO ready, 25.8 billion of assets in this fund. So it's a big fund. And I don't care how wealthy you are, you can take money in and out of this very quickly, no problem whatsoever. This is their net asset value, and you see this is the benchmark fund, and it pretty much mirrors the success of that. And this is, of course, for the last 12 months. So if you look at this, over the last few years, see from, well, in fact, you see right here, we're down. It doesn't happen very often. Look at that. It's pretty much up all the time, down. So that's an opportunity. And like I say, £10,000 there, £32,000 there. And you can click across here, price performance. And if you can see here on a quarterly basis or monthly basis, summary here. So as you can see, last month we've been negative. Last year to date, that's from the start of the year, negative. Last 12 months, negative. But last 3 years, positive. Last 5 years, positive. Last 10 years, positive. Since inception, positive. So it's very good there. And you can even look at the price performance over the last cumulative. So going back to inception, 221% growth in this fund, 10 years, 191%. And only in the last few years to date, it's been negative. Portfolio data, you look at what is involved in number of stocks, size of these companies, the sectors they're in, IT, healthcare, consumer discretionary, and the actual stocks themselves. And the biggest holding they have, because it's the biggest company in the US pretty much, is Apple. That's shy of 7%. Microsoft is second, 5.76. Amazon, Tesla, all these. And you can scroll through all these companies and see what they hold. There's 500 of them, or 505 of them. Click on distributions. This fund even pays a dividend, pays you income, which I think is reinvested, by the way, but it's 1.5% there. And costs, very important, because of course the more the fund charges you, the less profits you make. Now this is an actual similar fund. Cost comparisons for a £10,000 investment, £1,500, different fund. This here, a couple of £100. All right, so that's the difference. That's how much you save, £1,399, and the ongoing charge is 0.07%. I tend not to look at any funds above half of 1%. And that's not even 1%, not even half that, so 0.07. So you can see the costs are very good. All right, hope that explains it. Now, if you want to see the strategy I'll be using to maximize my gains when investing in this fund, check out my next video. And by all means, I also post things when I buy and sell on this fund. So if you subscribe to the channel, you'll get those updates. Hope that helps. Thank you for watching this video. This is not investment advice. This is what I hope to do with my son's money that's sitting in the bank doing nothing. Hopefully we'll get an ISA into the stock market and achieve great returns over the long term. But if you have any questions, please put them below on YouTube and I'll get back to you. Thank you very much.